Hey everybody, welcome back to another video. Today we have two, I want to say giants in the high yield savings account space. And I'm talking about SoFi and CIT Bank. Which of these organizations is for you? We're going to go over all of those details in today's video. Now, with all this being said, let's jump right into the best features of these two organizations as of February 2025. Now, what you see here on the left side, you're going to have SoFi and then you're going to have CIT. And SoFi is currently at 3.8% with direct deposit, which is slightly different than what CIT offers. Now, with the direct deposit for SoFi can be any amount. It can be $1, $2. It just has to be direct deposit so that you qualify for the high APY of 3.8%. Now, on the other hand, we have CIT, which has a slightly different approach to savings than SoFi because they offer a tiered approach. Now, what does this mean exactly? It means essentially that the more money you have to put in your high yield savings, the higher the interest rate will be for your high yield savings. So for instance, if you have $5,000 or more in your balance for your high yield savings, then you would qualify for a 4.35%, which is their platinum savings account. And if you don't have $5,000, that's okay because you would still get the 4.0%, which is offered to all of the other accounts regardless of the balance. Now, you do have to have at least $100 to start for both of these savings accounts. So it's just a matter of doing the balance on, hey, which one is best for you, what you're looking for. But one thing that I'm going to say here before we go on is that it's not all about the interest, and I'm going to explain what I mean here in a second. Now, this is one of the things that we also got to look for, at least pay attention to when it comes to choosing one of these accounts. And that is if there are any incentives or sign-up bonuses. So for example, SoFi does offer up to a $325 bonus. If you use the link in the description, you get $50 if you have a direct deposit between $1,000 and $4,999. If you have a direct deposit of $5,000 or more, then you get $325. And you get an extra $25 if you use the link in the description. Now, with CIT, currently at this time, I haven't found one bonus or account opening bonus for the public. Sometimes they offer it only to current customers. And even though I am a customer of CIT, I haven't really found one available. Now, they are both FDIC insured, but they go about FDIC insurance a little bit differently. Now, CIT on the right side gives you the standard up to $250,000. Now, SoFi, on the other hand, offers up to $2 million, and they do this by leveraging a network of banks that are also FDIC insured. So they take your money, they distribute it amongst these other FDIC insured banks, and that way they're able to increase your FDIC insurance. Now, if you have a lot of money and you have more than $250K and then you are considering CIT for one reason or another, there are ways that you can increase your FDIC insurance. You can add a joint account, like one more person to your savings account, and then you would have $250K per account per depositor. Also, you can increase your FDIC insurance all the way up to $1.25 million by adding beneficiaries. And at that point, you're dealing more with a trust-like type of account, but these are a little bit more advanced. I suggest that you call customer service so they can walk you through the process. And sometimes they make it very easy for you to just add beneficiaries to your high yield savings account on the website. Now, both of these accounts, of course, have no maintenance fees, but they do have a minimum deposit, at least on the CIT side, of $100 to get started. So with all this being said, let's jump right into the next stable comparison here, because when it comes to account access and you want to access and you want to, hey, where's my money? Where's my money? So SoFi actually offers the regular, pretty much standard online mobile ATM through checking, just like CIT. So with SoFi, however, if you have a savings account, if you open one, they automatically sign you up for a checking account and they automatically send you an ATM card. Now with CIT Platinum or the other CIT, then you can open an electronic checking, e-checking account, and then it will send you an ATM through it. So that's just another way that you can access your money right away in case you don't want to deal with making transfers and waiting a couple of business days, which we'll get into here in a second. Now, when it comes to making deposits and funding your account, SoFi, of course, offers the regular bank transfer through ACH. direct deposit, wire transfer. You can do mobile deposits. You can also deposit cash at certain stores, and you also have ATM access. Now, CIT offers the bank transfer, direct deposit, wire transfer, e-check. You can also mail checks with CIT. I'm putting this just so that you are aware. I don't think much of my audience will be mailing checks anytime soon, but if you want to mail checks, then you need to know about electronic check deposits, so that way you don't have to go and mail checks. So, tip for the day. All right, now if you are interested in knowing, hey, like how long does my withdrawal take? So SoFi takes about 1 to 3 business days, and CIT Platinum up to 2 business days. So essentially, they're about the same. It's really not that big of a difference in my personal opinion. And if you have a checking account, you can just transfer from your high yield savings to your checking and then deposit, take money out that way. And then you're pretty much covered and you have access to your money. However, if you use that method, by the way, you have to be aware that there are ATM withdrawal limits on a daily basis, so that you're not just going to the ATM and trying to withdraw $10,000, $20,000 for a down payment or something, right? So just be aware of that. All right, so when it comes to all-in-one, what do I mean by all-in-one? By all-in-one, I mean, hey, what else do these banks offer other than the high-yield savings accounts? And SoFi, of course, the way I personally see it, it's like a full-blown banking place where you can do loans, CDs, student loan refinancing. They have a lot of benefits and a lot of products. Unlike CIT, the way I see it, is just very much basic savings and checking banking. They have some CDs and a few other features, but SoFi is much more robust in a way. So if you are looking for convenience and having everything in one place, then maybe SoFi could be a better option for you, but there are other details that you got to know. Now, for example, the branding, right? So if you compare SoFi to CIT overall, not just the Platinum, but overall, you're going to notice that SoFi is like a little tiny baby, right? It's just like, hey, it was founded back in 2011 at Stanford, and it's only about 14 years old. Now, CIT itself was founded in 1908 and was acquired by First Citizens Bank, which itself was founded in 1898. So, wow, let's just say wow, right? So comparing these two organizations, like the way I see it, it's like CIT, it's kind of like a grandpa that's been in the financial space for a long time. And SoFi, it's kind of like the more modern, techie type of person who just likes a lot of technology. That's kind of like the way I see it. That's the vibe that I get. Now, when it comes to withdrawals allowed per month, SoFi has no limit, just like CIT, but there's one thing that you have to be aware of, because if you sign up and you qualify for the platinum rate, which is the higher rate for interest, then you still have to keep $5,000 in your balance so that you have that high APY. If not, then you have to use the other option, which is the Savings Connect, and that one will give you a 4.0% flat. It's just a matter of like what you qualify for, and at the end of the day, how much money you have to put in your account. Both of these accounts, so both of these banks, of course, offer customer service. So with all this being said, you might be wondering, okay, so we just went through a lot of numbers, we went through a lot of facts. Okay, got it. Like they have the pros and cons. Now, which one is for you, right? So let's put them side by side and kind of like do a summary on which features they're excel or they're best at. So the way I see it is you have SoFi on one hand, you have the APY at 3.8% APY with direct deposit. Also, they do have a bonus of up to $325, which could be very much enticing. There's no minimum deposit in the monthly fees. There is FDIC insurance up to $2 million, and there's got good tools for checking and savings, and also it's got buckets or vault that can help you essentially have different savings goals with the one account, with one savings account. So that way you don't have to open multiple savings accounts with multiple account numbers and then making the whole management more complicated. Now, CIT, on the other hand, you do have the higher APY with $5,000 or more at 4.35%. If not, then you have a Savings Connect at 4.0. There's no bonus, unfortunately, and then you have to make a deposit of $100 to start. There's no monthly fees, and they do have, of course, the standard FDIC insurance of up to $250,000. Now, the way I see CIT, overall, it's just a raw, pure savings account that you can just set it aside, set and forget, and then just start collecting as much interest as possible. But if you, as I'm going to be mentioning here, if you are looking for, so let's say that I want to make a recommendation to my mom and say, hey, mom, you got to check out these two banks. I would give SoFi as a recommendation to my mom if she's looking for the nice cheese, right? Like the nice cash signing bonus of up to $325. Also, the FDIC insurance of up to $2 million. Also, if she's looking for more investing options, savings, and other automated tools, they also have a robo-advisor. So SoFi has those investing tools to help you make better decisions for yourself. And also the flexibility of ATMs and products with checking. And if my mom is looking for just a very much high interest, I'll up to 4.35 or 4.0%. If she's got no other interest, like, hey, I don't have interest in investing or anything like that. Also, if she's looking for an organization with longer history and reputation, then CIT could be a better option for her. So if any of these options is for you and you are ready to sign up before the interests keep going down based on what the Federal Reserve is doing, there's going to be a couple of links in the description that you can start taking advantage of today, and let me know which one is for you.